journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is what we were looking at in the video. This was sent out this morning. This was our action over the last few days. You had a perfect A, B, C, D measuring exactly to the 1.618. You can see it went above it by about 10 cents. And we had another, there was your 382. That tells you that when you have that, you have a perfect A, B, C, D set up. So if you mark that, put it in right there, and there it comes in right about there, 64.70, and the high was 64.99. And then we broke down. We had a smaller one in here. Now, the reason why we were a little bearish here is because we had gold going, just making its big target up there at 43.83, okay, 43.88, and the high was 43.89. So we had that, and then you can see when it started to break, it broke very, very quickly. So you had to be on board to see it. In fact, if you use just a simple trend line technique and bring that out, you'll see that it brings into a perfect trend line. You can see these are the lows, and once it breaks that spot, there you can see, boom, down she came. It's a good entry technique, but it doesn't work all the time. But guess what, folks? Nothing works all the time. Overall, this is just a $3 break in silver. If we move this over a little bit, you'll probably see it's making a 382 off of something right back here. So let's just double check. We haven't done that yet, but we're going to do that right now to see if it's going to be right at the 382. Bring it over here. No, sir, it's right at the, it's a little below the 50. Oh, it hit the exact 50% is what it did. So that tells you you're still in an uptrend and you've had a pretty good bounce. And as you're looking at it right now, you're probably right at a 382. Oh, no, not even close. It's had a big break, and that's what we're watching here so far today. Okay, now, one other thing that I think is important to remember, folks, on the Dow Jones, and this is one of the things that I mentioned in the video that I sent out because I thought it was very important. The Dow Jones is made up of 20 stocks that are triple digits and 10 stocks that are not triple digits. The most expensive stock in the Dow Jones happens to be Goldman Sachs. So let's get Goldman Sachs up here because I want to show you what has happened over the last few days. Let's get the daily up. And this is the reason why you've seen a 1,000-point move in the Dow in 2 days, because of this right here, folks. This move started, and then you can see the last part of it was this. This is a triple-digit stock. This is like 10 times the value of Intel. So that's why you're looking. You can see it's rolling over today. But that's what we were looking at, is that move. The second one that is in there is Caterpillar. Caterpillar was doing exactly the same thing. This is a $600 number, 625. We're down a little bit today. So that's what that caused, that big move up in the Dow Jones. And maybe that's the reason we're getting a little bit of a pullback besides hitting those exact ABC numbers. Okay? So remember, we've had a heck of a move up in the Dow like we've never seen, but the move back so far, it stopped exactly at the 382. That was down there at the 8400. You get below that on a closing basis, that is not going to be very, very bullish. But that's a long way from where we are right now, folks. We've got to be really careful because these markets are active and they can go a long way, as we've seen. So we're through with Caterpillar. Get this out of the way. And we'll get this out of the way right here. And we want to come over here and take a look at soybeans. This is one of our trades that we had going on today. Whoa, get us out of here. This was our AI program that we were watching. And to get that up here, there was our buy right in here. Went right up to make our price objective right here. So we picked up another 5 cents in that. But our big win today, folks, was in the Russell. I have to bring that to your attention here because that was the one that started the whole Camilla on the downside. If I can find the Russell, and I'm sure I can somewhere. I'll have to move this around. Just by the way, Mike Moore will be our guest here at the break. Russell's disappeared. Let me get this up here. This is what we were focusing on from the very beginning this morning, folks. Let's just get this up here because it had been the weakest. All right, now we're going to just do an 8-minute chart because that's what we were watching. Okay, here's where you can already see our trades. They're right there. You'll be able to see them. Okay, here's where we were. All right, now when the market came right here, we were selling this first 382 retracement, would happen to be right there, as that was just about almost perfect right there. We caught that move right there, which was really good. And now what's happening, you can see here we're having an ABCD counter trend move. So what you do is you clean it out. You got a new high. This is our high, 2605. We broke 50 handles already, so we want to see what the 382 is back. And then you'll come over here, take a look at it, and you'll see there's where you are right there, okay? So there's what you're paying attention to here. There you go, right there's your Russell. Just made a 382 retracement, folks. So we're having a pretty good retracement back here, and it's moving pretty good. So you got to stand aside and see what it's moving. Look at the NASDAQ, how it's moving, folks. It's been a big move. Look at this NASDAQ. You talk about something that fit out perfectly with your program. Look, there you go. Look what it's done here. Just absolutely, there's your little pullback, and there's your run. We're going to be closing pretty good today. So with that Dow Jones, there's your 382. We're now 200 points above it, folks, 250. Nothing bearish about this puppy at all. So you got to pay attention to it. And there's you see it moving here to the upside. So you want to keep an eye on that. All right. By the way, Mike Moore will be our guest today about the crude oil. And since we're talking about that, we'll bring that up here and take a quick look and see what crude is doing this morning. We didn't do anything in the crude. We had 2 trades in the Russell, a trade in the cattle that I totally mismanaged, put my stop too close, and we missed $1,000 move. But all in all, it was a very, very good day, so no one was complaining too much. Okay, let's get up here. There's a crude oil right now. Let's put the AI up with it just to see how it's going because a little big run here. Let's just see if it was able to pick out what was happening here. So first of all, we have to bring the AI up and see what it's going. Oh, it did very well. There you can see. There it is right there, and it's having a nice move. There was your bottom right in here, and now it's moving to the upside. So that's a good sign that it's heading to the right direction. Now, one of the things that I do when I do this is I use the relative strength. Someone showed me this little trick here that's really good, and it's good for entries. What you're looking for is when you think there's a bottom, whether it's an A, B, C, D, or wherever, you don't have to actually pick that bottom. Wait until both of these lines turn up. Both your relative strengths both turn up. That's where your entry is. The rest of this stuff you don't even care about. When you're over the time, that's what you're watching. So your trigger here would be right about there. You don't get the low, but you're in the right side. And since this has started moving quickly, let's see if that was a 382 pullback that we had right here. And by golly, nothing yet, but it's still looking pretty good. Okay, so those are a couple of the things that we're watching here so far this morning. Let's get this out of the way here. And that's it. Let's see, we got a break here, and then we'll be right back. Mike Moore will be our guest at the break, folks, so stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, well, we're right back. This was showing you the NASDAQ. We've had a really nice move here coming off the bottom, completing an ABCD. Now, we've taken out some serious lows here. If we go and look at this on the 4-hour chart, and I know you're going to find this hard to believe, but guess what? What do you think that was, folks? That was the exact 382 of the whole thing. I mean, right on the bottom. We were buying it. That's where we did. It was one of our trades that we had today. It was lined up just absolutely perfectly, time and price coming together. And, okay. Oh, yeah, I think, okay, just I've got Mike Moore coming in. I want to make sure that he's going to be ready to go because I don't want to have any technical difficulties like I usually have. Okay. All right, here's where we are now with this. Let's get back to business, all right? This is the NASDAQ. Now, we want to be watching the big 382 because there's our big move right back here. All right, you'll see here, as you draw this in from your high here down to your low, you're banging against it right pretty close to where we are right about there. Okay, so we want to be paying very, very close attention to that. That's 253.92, so we'll see if that's going to be the right thing to do or not. Okay, now as we come back, we want to take a look at this gold market because here we are having a nice little bounce in the gold. I believe we just made the 382, and this, let's just bring it to a smaller time frame. We should take a look. Well, no, it's actually a little above the 382 right now. Hold on. It sure is. Hold on. Let's see where we are. Yeah, oh, well, it's way above it. It's right here. Now, if you're selling at the 382 on this, folks, your stop has got to be above this level right here. And you can't trade gold for less than $20 now, folks. When it drops $100, $105, folks. Now we're halfway back, so that's, it's coming back $100. We're at 85, back 50, so it's almost 50% retracement. So that's why you want to be watching it very, very close. It's a very, very important thing to be watching. My opinion, of course, 10 cents is worth. If you spend more than that, you got a nickel more than I have. Anyway, that's what we were watching here today here with the gold. Gold and silver have made some type of a smaller top. You can see this morning we were watching this. There was the opening right there. You can see here we've had another perfect number right there at our number, which was 33.88. And if you looked at this on that long-term hourly, I believe 4 hour, let's see if we had it right. There it was right up here. See that little number right there? That was your ABCD that we were looking for, and it hit it right on the old noggin, which was good. So not always does it do that, but this time it did, and so we're watching it as we speak here this morning. Very critical days in the market, folks, with all this volatility. It's here to stay. But by golly, I'll tell you what, ABCD is a pretty good thing to be watching when you're looking at these things, because it's got some really good things that make you pay attention to what's really happening with the market. Now, if we look at the E-mini S&P here, you'll see here's where we are with the E-mini S&P. Now, we've just completed an ABCD at the 50% retracement right here. There's your first ABCD move right there, right at the exact 50%, and you can still say it still has a really strong bias. Now, the only thing that will break this bias is that if we trade out this low right here. See, because we've come down, we hit 08, and we've already rallied almost 50 handles right up to the exact 50%. There's your ABCD. We can draw that in for you to see that, but as long as you're doing this, is still very bullish today. It's right on the money, and all you got to do now to be really bullish is get it above this level here, and it'll keep running. But remember, this doesn't stay this way all the time. At any moment, it could have an inversion, and that means the market flips over, and that's what you have to be looking at when you're watching these things unfold this way. Okay, I hope that helps explain what we're looking at, because it's not an easy thing to explain, but that's the best way of knowing it from the way that I can see it. Now, I wanted to show you, I've shown you the Caterpillar, and I've shown you the other, but let me show you a stock that is in deep trouble, folks. They haven't told us about it yet. This was what broke the market this morning. Okay, it's Oracle. Let's get up here. And I'm going to spend this weekend, I'm going to do a special segment for the newsletter on why I think the AI game is pretty much played out. Let's get the Oracle up there. It starts with an O, right? N-M-N-O. It's right to be here. Only one of them in there. Okay, now we'll put the hourly up, and you'll be able to see Oracle. All right, now look where it is now. Okay, remember, let's get the daily up, okay, so you can remember this is when Larry Ellison made $100 billion in one day. Look where it is now, folks. We're taking out the lows of November. This is not a good sign, folks. And they're renting, they have so much money. All these companies have been borrowing money like crazy. And if something's wrong with this is where the problem will lie, all right? So let's remind let's see so the bell is ringing. Let's see what's happening here. Maybe I can figure out what's going on. Still seeing my Q chart. Wow, what's wrong with that? Let's change this up here. Hold on, I'm sorry, folks. Technical stuff with me is not always that good. And I want to get the entire screen there. And there we got. Okay, all right. Okay, here's where we were with Oracle. You can see here we've had this big break to the downside. Some of these have been monsters as far as the news out and stuff. Something's wrong with this stock, folks. I mean, you don't have to be a rocket scientist. Let me explain something else to you that I don't understand, okay? Things are really great. Now, what store in your neighborhood is always packed? The parking lots are always packed. Everything's packed all the time. What's the name of that store? It starts with a C. It ends in a T, and it's called Costco. Really great company. Does this look like a stock that's going nuts to the upside? What's wrong with Costco? Do people stop going? This is a big one. That's baloney. Okay, let's take a look at another one that I think is interesting. Amazon. Everybody shops at Amazon. I shop at Amazon every day almost. See, here's Amazon. Bring it up here. Boom. Look at this. Going down. Remember your Black Friday stuff? They had a nice run up into Black Friday. Oh, that looked pretty good. Well, the sales must have stopped right afterwards, because there she goes. This is just an hourly chart, but look at it. You think that's a bullish chart? Hello, operator. Something's wrong out here. And who delivers these products? Let's take a look. The number one of the transportation index is United Parcel Service, UPS. And if you bring it up, we're going to do it on a daily so you can see it. That's why I'm saying I don't know about the economy or anything, but look at UPS. Hello. Whoa, I see it's a good test, Mike. All right. Then you can say, look, it's going down. There's nothing bullish about this. And Federal Express is a little better, but the same thing. And okay, people go out and they spend money. If they don't have a lot of money to spend, what do? They use their Visa card, right? Well, let's see how Visa's doing during this season, okay? Oh, we've had an up move. Just a minute. Let's get this out of it. Look at it here. We had a pretty good up move yesterday. You can see that was one of the reasons why the Dow was going up so strong. But, since May, it's been in a downtrend. All we've done right now is we've just made a little retracement off of the June high. Let's draw that in, and you'll see that this doesn't look interesting. I'm just using common sense here, and believe me, if you pay more than 2 cents, you've overpaid. So let's remind ourselves of that as we look at these things here unfolding here today, okay? So we'll take a break. We'll have Mike Moore coming up, folks, so stay tuned. Be always good stuff.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we have Mike Moore of More Analytics in the house. Mike, how you doing this morning?
Larry, how are you, my friend?
This
Thank you very
afternoon.
much for having me on. I appreciate it.
Good. Hey, let's start out with the crude oil.
Okay, can you see my screen okay?
Yeah, it's coming in good.
Okay.
Perfect.
Okay, so the crude oil, just on a little wider perspective, we've been in a real chop and grind session here for almost a month and a half. And more recently, the trade back below 59.98, it brought in 297 of pressure. That was the failure back down below this main line here. You got bearish here, got jerked back to the bullish here, and now we're bearish again now that we're back down below this line. So we've seen 297 from the 59.98 area, from the 58.83 area, we've seen $1.82. And then the trade below 57.71. Sorry, the failure back below this, where this came in right in here at 57.75 now warrants a pressure again. We do have a larger formation down below here, which is going to come in at, sorry, I have my 56.58. 56.59 to 58 through Monday. Decent trade below there will project this downward further with the projections of $5 plus. But we really like to see it bounce off there first before breaking below. If it doesn't break below, if it doesn't bounce off at first and just blows right through it, it'll likely come back up through it, and then it'll be a better long to get long on the break back above. And if we break above this formation up here, that'll warrant a decent strength again. That's going to come in at 58.79 minus 0.5 of the tick per hour starting at 1 o'clock p.m. Eastern Standard Time.
Okay.
And then in the RBOB, or unleaded gasoline, been trucking down here. A maintained gap higher in there on Monday will leave a minor bullish reversal below. We have been bearish overall in the RBOB from, bear with me a second. We held exhaustion above with the 195.17 high, and we rolled over 20.65 cents to the downside with additional levels to be bearish below at 189.98, which we've seen 15.46 cents below 181.58. Which I said will I'm sorry, decent trade, but we've seen 15.4. Decent trade above 181.58, excuse me, will project this upward 7 cents, but that's actually going to come in at 181.45 as of 1 o'clock p.m. Eastern Standard Time.
Hey, Mike, we got a question from one of our listeners, and that is, how does it, when you have RBOB gasoline from all, like gasoline in Florida is like $2.80 a gallon, California it's $5.80 a gallon. How do they make those changes to determine, you know, which is the best market to be in?
You know, what's the reason for the cost differences?
Yeah.
Well,
I guess population and demand did, I guess.
What's
I
that?
don't know the answer. I thought maybe you did. So.
Well, you got transportation costs, right? And then there's a lot of other factors in there too, like rental costs. Like, you know, if you're in Manhattan, I think there's only one or two gas stations on the island of Manhattan, and those rentals are very high. So that's going to affect the price of the gasoline there. Obviously, if they got to pump gasoline further along pipelines, it's going to take a lot longer, or transport it by truck. So those are all going to affect those measures. Makes it okay? Does that make sense?
Yeah, it makes sense. Yeah, very good.
Okay. So the RBOB
Continue.
also is sitting, trying to penetrate below this line right here, but I don't think they saw a decent penetration below it here. But decent penetration below 175, 59 to 55 will also warrant a decent pressure. But we didn't quite get that today yet. And then the heating oil, a maintained gap higher in there on Monday will leave a minor bullish reversal below. The heat, the trade below 234.12 had brought in 14.29 cents of pressure, and then just a little bit more here with additional areas to be bearish below at 233.28. We're still sort of holding this last exhaustion level, this final exhaustion level between 221.29 and 220.09. We punctured below it a little bit here to 219.15, but it's still a general hold. But these are in general, this is more of a trending structure, not a corrective structure. If we were to break back above this formation up in here, that's going to warrant decent strength. That's going to come in at 227.42, minus 0.3 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time.
Okay.
And then the Brent, similar picture to the WTI. The trade below 63.37 brought in $2.60 of pressure. We were bearish below 61.58 as well. That projects this downward at $1.30 minimum, $5 plus maximum. So that had broken below here, did not break back above it, and just rolled over again. If it does break back above this line decently, though, that's going to warrant a decent strength. That's going to come in at 61.63. Plus 0.5 of a tick per hour starting at 6 o'clock p.m. Sunday night. And now let me just give you a number here real quick. So it's 83. I'm just going to calculate something real quick.
That's another question when we have a chance.
What's that?
Have another question when we have a chance.
Sure.
Oh, the question, I'll just tell you what the question is. Do you factor in your analysis when there's an announcement like Arabs have raised oil or stuff like that, or you just look at the charts? That's his question.
I'm sorry, can you just repeat that one more time?
The person's asking, do you listen to anything in the news like the Arabs have dropped oil prices or anything like that? Does that factor anything, or you just look at the charts?
The analysis is strictly technical. So it's just based off of price movement and stuff like that. Obviously, any news-based event is going to toss out a lot of the technicals for the short duration after the news event happens. But these are produced in the morning and sent out to traders that are going to be using them for the day. So I don't look at anything on a time frame lower than a 60-minute chart. So I'm looking at 60-minute charts and daily charts.
Okay, good. Stay with us, Mike. We got some more to go. Mike Moore, more analytics, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Mike Moore, More Analytics. Please continue, Mike.
Larry, just to finish up the commentary on the question by your guest, I produce this in the morning, so I send this full analysis that you see here on this, pretty extensive analysis. I send this out to traders in the morning by 8:30 in the morning, so they have time to read this before the open of the markets. So I don't redo this during the day. This comes out in the morning, and then I send out a post-market podcast in the evening, just after the market closes. Okay.
Okay, he's giving us a thumbs up, so you got the right answer. Please continue, buddy.
Yep. Gas oil. Maintain gap higher on Monday. We'll leave a minor bullish reversal below. And in here, we held exhaustion above with an 805 high and rolled over 157, and a little bit more than that today, down to 625.50, with additional areas to be short below. Over in here, at below 735.50. Or 769.75, 735.50, and a number of other places down below. If we break above this formation above here, that may warrant a strength, but that's not a very good formation. It comes in at 738.26, minus 35 per hour, starting at 1 o'clock p.m. Eastern Standard Time. And currently, the cracks, the heat cracks have been bearish, and the RBOB cracks have also been bearish, meaning, and we talked about this last time a little bit, but the importance of these cracks I'd shown before on a previous show, that if you were long in the heating oil during this period, you would have made $15,000 more per contract than you would have in the crude in a matter of 3 or 4 weeks. And likewise, on the way down here, you would have made 14 grand more in the past 3 weeks on the downside, being short the heat. The crude oil has actually been chopping sideways and downwards, but sometimes even if that's doing that, these cracks can have some pretty nice directional moves in and of themselves. Mm-hmm. So that's an additional advantage by trading those spreads. Anyway, we'll jump back over to the natural gas. Okay, so the natural, we were in a bearish trend. Hold on a second. I'm sorry, bear with me a second. This is the natural gas. There we go. So we were in a bearish trend. The trade we took out 36, just continued weakness overall. The fact that we took out the 430.60 to 425.20 area. I warned in the post-market podcast on Friday, this went out warning of pressure. So we've come off $1.12.4 from the 528.90 low, 528.90 close. I also warned the maintain gap lower would leave a minor bearish reversal above. So we'd come off 849 ticks from the 501.40 open. And the break below 496.60 brought in 801 ticks of pressure. The break below 490.30 had brought in 738 ticks of pressure. And then the failure below 458.50 has brought in 420 ticks of pressure. So that was getting bearish on the close here, the open there, and then below this formation, and then the failure back below this formation. I did get bearish below this formation right here, got chopped, got bullish in here, and then got re-bearish here. So there was one chop in that way on the way down here. But the main bias has remained bearish.
Okay, we have another question, Mike. And the question is, when you get chopped here, chopped there, what determines that? The amount that you've risked, or where do you think the trend has changed? That's what the question is.
Right. So I was bearish all the way down in here, and additionally bearish below here. And then that got stopped out with a bullish call here, and then that got stopped out with a reversal bearish here, and then stayed bearish again down into here.
Okay, that's the answer.
So there was just, from the time we got bearish on the close right here, the only time it got chopped out was in here, and then resumed bearishness in here.
Okay.
And take a look at the S&Ps.
Yes, sir.
Just bear with me a minute. Okay, here's the S&P 500. Some pretty interesting trading in here lately. Okay. So we've been bullish overall from 3502. We know that from previous shows. We've seen 3,451.75 to the upside. A lot of other bullish calls in here. Those are all now on hold. More recently from previous shows, we'd held that exhaustion down below at 65.25 on a pullback down, and then we rallied 403.75. A couple other bullish calls in here. One of the projections we have was from 67.91 and quarter, which I said projects out upward 265 plus. I'm not real strong on that though. We've seen 137.5 of that, but that is now on hold. I said the trade back above 68.43 and a quarter right here got us bullish. We additionally got bullish above this line, but I said if we fell back down through this line, look for decent pressure to come in. So that's why I said buy against or approaching a decent stop against 68.93.41, and then get short on a decent penetration or pull back and look for decent pressure. So we got bearish on the break back below that line, and we've just dumped down into here. Really short term, this number right here, I said at 68.1750. I said to get short on a decent penetration below there, but we didn't see the decent penetration. The decent penetration was 25.75 today. And I said if we break below here but not decently and back above, look for short covering, possibly decent. So we're starting to see that right now. We've short covered back above there, 68.1750, and we're trading 68.56.75 right now. So the break back above that would have been 10 points. So you're about 47 points into the long from there. And if this gaps open lower on Monday, you're going to leave a fairly sizable medium bearish reversal above that would warrant of decent pressure for days/weeks. I did want to show your viewers something real quick. I'm just going to zoom out real quick, all right? So there's going to be lines all over the place, and this is going to look ridiculous.
That's okay. Take your time, Bubba. Take your time.
But in some of these other instances where the market has rolled over in the bear market in here. We've come over, made a big dip down below old lows, come back up and couldn't quite take out the lows, and then sort of lumbered over. And similar to what we saw here. And here we've come down, taken out these lows, rallied back up, but haven't taken out these highs either. So if this does start to lumber and roll over here, we could see a more sizable sell-off. We'll have to see.
Mike, thanks for joining us, buddy. We'll have you on again next week, okay?
All right. Thank you, Larry, for your time. Appreciate it.
Mike Moore, more analytics, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is Bitcoin. As you can see, we've been in a downtrend since October the 2nd. When it hit 128, we went down to 80. For the last 2 weeks, folks, we've only been able to make it to the 382, 2 days. That was 3 and 4 days ago. And as you can see, this is very bearish. You completed the ABCD. Folks, this is one flat bearish chart. I don't know what's going to happen to this thing, but this is not bullish. Stop and think where we are. We took these highs out like it didn't even exist. And this can't even get above the 382. This was a 382. I mean, my goodness, this is a really bearish chart. I'm bringing that to your attention because I'm just looking at it from that way, as opposed to gold. You know, whole gold, we got at what, 4,300 or something like that? I mean, this is a huge market. big difference. So I want to pay attention to that because I do follow it because there's a $1 trillion market involved here. That's it. You know, the Dow Jones is coming back pretty good now. We're only down 150. We were down a couple hundred just a little while ago. So we're going to see if that holds together. But anyway, be kind to your neighbors, folks. We're in the midst of the holiday season. It's not an easy gig, so try to live every day in an attitude of gratitude, and may God bless. And I didn't check the old clock on the wall today. Let me double check to make sure Al's not going to be mad at me. And he is, because it's 1 minute and 10 seconds. Hold him on. We'll fill it up with something here, folks. Here's where we are. With the gold. Let's just get it up here to see, because we're having a little bit of a bounce here. In fact, we've already talked about it. Let's get it down to the smaller time frame, because it's a pretty significant top that came in, folks. There was the retracement. You see right at we're exactly 50%. There's your ABCD on the down. If you like ABCDs, believe it or not, look at this. AB equal CD within $10 of the absolute bottom, and there's the rally back. Right at the old 50% level. There was your first 382. Come right to the 50%, stopped ice cold, and that's where we are right now. So let's pay attention, and we'll see you a little bit later. May God bless.